Well, the main concern for the oil markets this year has obviously been, and over the past year, has obviously been demand destruction. Most of the demand destruction has been from the industrialized countries, from the developed world. Well over 1.5 million barrels a day of lost demand in the United States alone.
Yes, actually you're right. I mean, at least short term, China has been able to put a lot of money behind its economy and try to stimulate it. If everything goes okay, there is a big probability that they're going to register at 8% or close to it, GDP growth this year.
Even as stock markets have continued to break down to new lows, oil really hasn't. And in fact, over the last week or so, oil prices have actually started to move up again. The last 3 inventory reports we got from the United States indicate a dropping in inventories from record high levels. We've also seen potentially an uptick in demand. In the U.S., motor gasoline demand over the last 4 weeks is actually 2.5%, almost 2.5% higher than it was a year ago. So that may indicate that lower prices are starting to filter through into better demand. And getting back into the China issue, one of the interesting things there is that a lot of people have been talking about some positive developments in China, which of course you know a lot more about than I do.
Yeah, it's true that since the downturn started and the problems were apparent, for whatever reason the system was not allowed to function properly, which means let banks go bankrupt and then have wealthy banks pick up their businesses. Now China cannot save the world, but they can provide a positive push for the global economy this year, and also by investing in countries like the United States and through the buying of treasuries, they're also helping the U.S. Deal with the domestic problems in the markets here. Now, taxpayers' money have been put towards rescuing certain banks, and the hope is that it's going to work. It may or may not work. The point is that we have been writing that if the banking industry is not nationalized in the United States, the problem will not be solved. One of the easiest ways to understand is that right now the biggest problem we still have is the huge CDS market, the swap market for the debt, basically, which the big banks have been involved all these past years, and it's in the tens of billions, trillions of dollars. So the point is that once you have the banks controlled by the government controls both. Let's say you have 2 banks that they are involved in a swap trade. Once you own them both, you control both parts of the trade. So you can just cancel it out, and this solves your problem. The only way to do that is only if you own them, and you don't have stockholders to talk about, you don't have bondholders, you don't have all these things. Now, as silly this sounds, this will solve a lot of problems without needing to throw money after bad assets. It seems to have been the case until now. As many of our viewers may know, of course, is that in the Silk Road Investor I cover overseas markets, basically Asia, Russia, the Middle East, and all these people there have been looking towards the United States to find out what they're going to do, being the biggest economy, and also attracting a lot of capital in the form of buying U.S. treasuries and things. And we have seen, by all means, I mean, there is all the economies in the world are hurting. So maybe the banking system there is not as bad as here.